Imagine this. You buy a stock only one time and it pays you again and again and again, monthly or quarterly, depending on which one you buy, and consistently cash flowing into your account, whether the market goes up, down, or sideways. Now imagine a whole portfolio of stocks just like this, consistently building you cash like your own ATM machine, paying you out every single month or quarter. If every other investor is chasing the next big stock, you'll be sitting back collecting checks. Stick around to the end of this video so you'll learn exactly how to be a successful dividend investor, understand the fundamentals of dividends, and know these 3 dates that you absolutely have to know if you want to get paid in dividend income. Before we get started, welcome back to the channel where we discuss how to grow our portfolios for the ultimate portfolio payday. Just remember, I'm some random dude on the internet, so always make sure to do your own due diligence before you invest any of your hard-earned money in the market. What we discuss here may work for my portfolio, but it might not work for yours. So let's get started. So today is part one of a 4-part series that I've created regarding dividend investing. So let's start with section 1, how to be a successful dividend investor. The mindset, income versus speculation. Most investors chase growth. They want the next tech breakout like AI. And I'm totally guilty of it as well. I'm heavily invested in Palantir, Nvidia, Tesla, and a slew of other AI stocks. But dividend investing is different. You're looking for consistent, reliable income streams from companies that return cash to shareholders. Depending on which companies you pick, such as the Dividend Kings, companies have returned dividends for 40, 50, even more than 60 straight consecutive years. That may mean slower growth sometimes, but also far more peace of mind. Number 2, define your goals. You want to ask yourself, why are you investing in dividends? Do you want supplemental income in retirement? Do you want to build a portfolio that pays you monthly or quarterly? Do you want to invest it, set it, and forget it? Or maybe it's a combination of all three. Your ultimate goal determines your strategy. Do you want high yield versus a dividend growth stock or dividend growth ETF? How frequently do you want to be paid out? What's your risk tolerance? As you can see, there are a lot of different variables that you would need to figure out prior to starting your investing journey to make sure that you get every ounce of benefit out of your dividend portfolio. Number 3, pick quality companies and ETFs and don't just focus on the yield. A super high yield is extremely attractive, but extremely dangerous if the company or fund can't sustain that dividend payout. Remember, some of the best and most consistent dividend payers have strong earnings, low payout ratios, healthy balance sheets, and a great track record of increasing their dividends year over year. For example, another great group of dividend payers are the dividend aristocrats. They've raised their dividends for at least 25 consecutive years. These are the types of companies and businesses that you want to research and add to your portfolio. For me personally, I have companies like AbbVie and Altria Group that are the basis of my dividend portfolio because they are dividend kings. Number 4, reinvest and compound. One of the greatest powers of dividend investing is the compounding effect. If you receive dividends and reinvest them into more shares, your income will continually grow faster over time. The longer you hold, the more powerful this becomes. In some of my other videos, I've talked about the snowball effect of compounding dividends. So definitely check out the links below of some of my previous videos to learn more about that. Next, number 5, stay the course, but don't micromanage. The last thing you want to do is continually tweak with your dividend portfolio. Markets will bounce, yields will fluctuate, companies face tough times. But since you're investing in the companies for the dividends, focus on the payouts and the company's ability to sustain and grow their dividends, not focusing on short-term price swings. So you always want to make sure you have your list and continually update it depending on what's going on in the current market and within the company's balance sheet. Okay, now that we've covered the high level how of what successful dividend investing is, let's talk about what a dividend actually is. This way, we can break down the dividend basics and have you speaking like a true dividend investor. Let's go deeper into what a dividend is and how it actually works. A dividend is a portion of a company's profits or retained earnings cash flow that the board of directors decides to distribute to shareholders. It's compensation for owning the stock. Not every company does this. Many growth firms reinvest everything back into the business. However, dividend investors prefer firms that return some cash to shareholders. The different types of dividends are cash dividends, which are the most common. You get a check or a deposit per share that you own. Special dividends are one time payments when a company has excess cash, and stock dividends are extra shares instead of cash. Most of our focus today will be on regular recurring cash dividends because they build the income stream that you're seeking. Next, let's find out what a dividend yield, payout ratio, and growth are all about. A dividend yield is an annual dividend per share divided by the current share price. For example, a company paying $4 a share annually when the share price is $100 has a 4% yield. The payout ratio is a dividend per share divided by the earnings per share, or sometimes free cash flow. A low to moderate payout ratio indicates the company has room to grow dividends or withstand downturns. Dividend growth, you ideally want companies that not only pay today, but raise their dividends over time. That protects you from inflation and ensures your income doesn't shrink in purchasing power. Safety and sustainability of a dividend, companies in the dividend kings and aristocrats list stand out because they've raised dividends for 25 plus years. That kind of track record implies strong business fundamentals, safety, and sustainability. So let's take a real world example. The company, Eversource Energy, is a utility company that was added to the dividend aristocrats this year. It offers roughly a 4.6% yield, and over the last 5 years has averaged a 5.9% dividend growth rate. So remember, don't just chase the highest yield. Seek a combination of a good yield and a dividend growth trajectory plus sustainability. This means both yield and growth. That's the kind of profile that appeals to dividend investors. So, the last subject I want to discuss today are the important dates that every dividend investor must know. These are absolutely critical because if you miss these dates, you won't get paid, regardless of even if you own the stock. I started a new portfolio earlier this year for some growth ETFs, and I had my portfolio set to drip, but I noticed I wasn't earning any dividends on the ETFs that I had purchased. And the reason that I wasn't earning dividends is because of what I'm going to discuss next. So let's put some real world context into this subject. Let's just say you're buying shares of a dividend paying company, one of the dividend kings, for instance. The board declares the dividend on October 15th. First, what's the declaration date? The declaration date is when a company's board declares the dividend. They announce the amount, the ex dividend date, and the payment date. Think of it as like the official go that they're paying it. They set the ex dividend date on November 10th. This is probably the most important date that you need to know, and the main reason why I wasn't earning any dividends on my new portfolio. If you purchase the stock or ETF on or after the ex dividend date, you will not receive the upcoming dividend. You must own the shares before the ex dividend date in order to be eligible to receive dividends. If you buy on November 9th, you qualify. If you buy on November 10th, you don't. If your goal is to make income now, always check the ex dividend date before you invest into a stock or an ETF. Next, let's talk about the record date. The record date or record date is November 12th. This typically is a few days after the ex dividend date. The company checks the books to see which shareholders qualified for the dividends. So if you want to be paid, you better hope that you are registered as an owner of that stock before that ex dividend date. It's nothing that you need to take care of. It's more about what the company does, but they do this for their administration and accuracy. One thing that I always do is I set the ex dividend dates in my Outlook calendar to remind me of when it's time to possibly re up on a purchase for that particular company or ETF. Next, we have the payment date. Payment date is December 1st. This is when the dividend actually hits your account. It typically is a few weeks after the ex dividend date. For example, some companies like to pay monthly, like a REIT, like Realty Income, and others are quarterly or even annually. All right, well, that wasn't a bad part one of the four-part series for being a successful dividend investor. We covered a lot today: how to become a successful dividend investor, focusing on mindset, goals, quality companies, reinvestment, and discipline. We talked about the fundamentals of dividends, what they are, the yield, the payout ratio, growth, and safety. And lastly, we discussed key dividend dates, such as the declaration date, the ex dividend date, the record date, the payout date, which you must know all of these if you expect to earn income. In the next video, part two of this series, we'll dive into how to pick specific stocks or ETFs, the best ways to invest by understanding yield, and this one thing to know if a stock is a total avoid. Check out the video right here if you want to learn about some of the other high yield dividend investments that I have in my portfolio. Don't forget to check out my other investing videos down below. And if you found this video useful, hit the like button, subscribe if you're serious about building dividend income streams, and drop a comment down below. What's your favorite dividend paying company and why? Thanks for watching, and I'll see you in part two.